So I think quality over period has changed, and that is something where we have also made those kind of adjustments in our thought process. Now, some of the traditional industries, the growth is exploding. So I think there is general perception that all the small caps are expensive.
Hello and welcome to this very special series where we bring you insightful and exclusive conversations with some of the top voices from the India's mutual fund industry space. And today I'm joined by one such fund manager. We are joined by Mr. Ajay Khandelwal, who is a fund manager at Motilal Oswal. Thank you so much, Ajay, for taking out the time to talk to us. You know, when we think of Motilal Oswal, the first thing that comes to our mind is the QGLP, philosophy, quality, growth, longevity, and price. How do you think that's evolved over the years, from your perspective as a fund manager when you're trying to work on the strategies, right? If you can help us understand that.
So I think QGLP still remains our core philosophy.
Right.
But over a period of time, what has happened in the market is that the longevity part, there's so much of disruption happening. If you look at traditional industries, now that industry structure is changing. Take the case of paint industry. For so long, it was well organized, largely three-player industry. But now suddenly large pool of capital has come into the industry.
Right.
So suddenly the pricing power margin is at risk. And also how even in the other industries, for example, let's take a case of staples. Now everyone is wondering what is happening in staples. Why growth is not coming? But the way now earlier distribution used to happen, that I think has changed. The quick commerce has really changed the maths. So a lot of these unorganized social media generated brands, they are taking wallet share. So I think that is somewhere also not captured in traditional databases. Like that is another problem, which is why some of these industries which were used to be secular industries,
right,
given the growth profile of India, the demography. But I think that is changing. So at Motilal, we look at data very closely. So when we say quality, for us, quality is not only about return on capital. It is also about whether that business is winning market share. It is getting better in terms of their overall capital allocation. Where are they funding that growth form? So where are they getting the capital? So I think quality over period has changed. And that is something where we have also made those kind of adjustments in our thought process. Growth still remains, I think, most pivotal point for us. In our portfolio, you will never find stocks which struggle in terms of growth. We don't take a call on sometime a cycle will come back for an industry and growth will come back. We never do that. So growth is extremely important. And price is something, again, where the way traditionally pricing models, for example, price to earning or EV beta or price to sales, that used to happen. But these new age businesses, they are very different.
Right.
So I think we have changed our understanding, how we evaluate, and also some of these industries which are making a comeback. Where what happens initially, you see the growth in order book and then finally it flows to P&L.
Right.
So all those changes we have incorporated in our thought process. So this is a QGLP, but I think now close to more reality of new market conditions. But I think this is where we are. So I think this is some of that old philosophy with new market changes and right allocation, keeping in mind the new reality. I think that is what is changing.
Right. I think you rightly mentioned, right, how you also have to evolve your strategies while keeping your core strategy also at place, because obviously because of these new age companies and how India is also evolving in the way, we are seeing how the new age companies are coming forward. But just being on that topic for a minute, right, these new age companies, because most of the, like this conventionally the framework was always, looking at those price to earnings ratio, all these certain factors that you would look at to understand the fundamentals of a traditional company. But it changed, when, Paytm got listed, Zomato got listed, after that, obviously we've seen like these bunch of new age firms where most of them are loss making as well, but that's not the only factor that matters, right? So how do you kind of have changed that and try to incorporate those, new age companies into this framework? Have you also kind of changed the way you evaluate, fundamentals of the company? Just wanted to understand that as well.
So I think here, what big difference has happened is that earlier, understanding the addressable market was easier.
Mhm.
Now I'll give you some examples. For example, 2017, we were exporting $500 million worth of mobiles.
Right.
Now we are almost exporting $25 billion.
Mhm.
That is 50x kind of change that has happened. Now, this whole addressable market is expanding, and this is where I think we spend our most time on. And this is about new manufacturing, which is happening in India, EMS industry. I'll give you traditional example. Defense, for example. We have been there.
Mhm.
2017-18, again, India's export was, say, 2,500 crore.
Right.
Now, this year, we'll end up doing 50,000 crore. So, the market opportunity is expanding, and every time when we meet companies, we try and understand that how this whole opportunity is playing out. Because this is where I think the change that has happened last time. Because earlier, if you look at any staple company, you will understand this is the market size, this is the growth, this is the GDP growth, this is the
Yeah.
penetration, and you will understand this is baseline growth for the industry. Now, with these kind of, even some of the traditional industries, the growth is exploding.
Mhm.
And the challenge is, we say this is expensive. But in terms of, for me, expensive is not high PE. High PE signifies higher expectation of growth. If that growth is not delivered, then it is an expensive stock.
Right.
But
Correct.
if that growth is delivered, then I think those businesses still continue to do well. And as you talked about quick commerce, for example. Now, quick commerce, whether the addressable market is only staples or it is other products which they are able to deliver at home, you see the way they are expanding their basket. So the addressable opportunity is improving. Then comes the part for us, which is more important, is how they behave on unit economics. Because a perpetual loss-making business will not generate wealth for investors. So then we look at the unit economics. Initially, unit economics, if it is positive, but still company will still show losses because there are other expenses,
Right. Correct.
corporate expenses and other expenses. They are again putting money back into the business. So we try to gauge whether the unit economics, store economics, how it is improving. And finally, then we take a call that, okay, how are they moving vis-a-vis our expectation? When they will turn profitable, what is going to be eventual profitability? How much capital is required for that? And basis on that, we try and evaluate. So I think this is a journey where every milestone is important, because if they suppose they do not deliver on margins, then I think it's still a loss-making proposition. We have seen so many cases where, for example, these shared cab services.
Yeah.
Till the time P money was there, I think they were doing well. But when money stops, suddenly you see deterioration service quality, and
Right.
even the uh, growth also starts coming off. So I think these are some of the things where, because we spend so much time, I think we have a better grip and
Correct.
we are able to evaluate it. So this is how I think the change that has come in market now.
Yeah. I think the whole point is a better understanding of business models, how to evaluate, because all the businesses are not going to be the same, right? Every valuation metric is also very different. But coming to your investment philosophy, mostly you look at the mid cap and small cap space, which is a very interesting space, right? Everybody's been trying to generate all the alpha from that space, at least from the last 2 to 3 years, which also created froth. But when you understand it from a retail investor perspective, it's very different because they don't understand which small cap stock to actually go after, right? But as a fund manager, that is where your role comes in. All these funds, right, that you look at, and you try to ensure that all the high growth potential companies make the list. So just wanted to understand your philosophy as to how you try to, there's opportunity, but you also have to be very careful. So just wanted to understand your philosophy there.
So I think there is general perception that all the small caps are expensive. But I'll give you example. For example, specialty chemical stocks have not done anything. Building material, grinding medium companies. These are all very good businesses. In the past, they have made good money for investors, and even we have held them at some point in time in our portfolio. But growth is not coming, so stocks are not doing any well. So I think there is large pocket of small caps for last 2-3 years. They have not done anything. But at the same time, there are certain pockets of small caps, for example, in manufacturing. Now, India is seeing the kind of manufacturing we have never seen before. Some of the examples I gave you.
Right, correct.
And the good part is the manufacturing that is happening now is very capital efficient. So the largest EMS company has similar capital deployed, which is like the 20th steel company. So imagine the capital efficiency for small cap is improved drastically. Unlike last years when small cap used to do well and then they get into trouble, the balance sheets were not as strong. And also this time, the debt to equity for small cap is almost at 10-15 year low. So people have money. They are growing through their own balance sheets. So for us, every quarter is important because eventually, if I'm looking at a 3 to 5 year story, we have to take those small steps in that direction. So we try to assess at all milestones, but at the same time, we try not to lose the big picture. Being selective in small and mid cap is extremely important. Otherwise, it becomes a value trap like large caps also.
Yeah, correct.
So that is the growth part. And second is managing your risk. In small and mid cap, managing risk is equally important. I mean, I know, for example, some of my large holding, they, I think overnight they lost, say, 1/5 of their order book. I need to act immediately.
Correct.
So managing risk is equally important because they are dependent on certain geographies, certain products, certain clients. So I think small cap is more about managing risk. Upside comes naturally.
Right, so correct. But where does the price factor come in here, right? Because managing risk is important, understanding the fundamentals is important. But price is something because the idea is always, okay, it's a cheaper stock at least, so it means it's good. But I mean, I just wanted to understand how do you look at price as the factor when you're trying to evaluate these companies?
So again, I'll try to simplify. Price, earning, we need to see from the perspective of whether the stock is seeing earning upgrade cycle or downgrade cycle. Because a 15 PE stock may not be cheap if it is not growing. Whereas a 30 PE stock may be extremely cheap, it is growing faster than it. It's a simple math. If a 10 PE, 10% earning growth company at 15 times, whereas a 30 PE% growing company at 40, after 4 years, they are at the same PE. So we need to see whether the earning upgrade cycle is continuing or not. So the earning acceleration actually makes that stock cheaper. So I think this is a very important point to understand that earning upgrade cycle determines stock price behavior.
Right, correct. QGLP remains for Motilal Oswal, but of course it's evolving as and when these new age companies come into picture, and also when you look at evaluating small caps, earnings and fundamentals remain, the core of everything that you do. So thank you so much, Ajay, for your time. It was great talking to you.
Pleasure.